Hey guys, welcome back to the Investing Iguana. Today, I'm tackling the golden question for every Singapore investor. Is your portfolio really paying you more every year, or just giving you the same old payouts? We all love dividends. Steady cash in the pocket makes any investor smile. But here's my twist. What if your stocks could double your payouts, not just hand out small raises? Let's dig into how smart investors sniff out the real dividend growth engines in Singapore, and not just chase one-off windfalls. A quick intro, why Trust Iggy? I'm ranked 8th in 2024 Influential Tigers by Tiger Brokers, just crossed 1 million reads and 58,000 likes on my content, and my videos clock over 600,000 watch hours. I dig deep into regional and global trends, adapted from my latest deep dive on Substack, link in description. Let's map out today's video. We'll explore the rare dividend doublers in Singapore's stock market, zoom into standout cases like DFI Retail, that 1,200% shocker, IFast and PropNex, break down banks, REITs, and sectors for compounding potential. Discuss key risks and finish with a playbook for smart dividend investing, plus my personal verdicts. Picture this. Every year, most SG blue chip stocks quietly raise their payouts by a few percent. A nice bonus, but pretty tame stuff. Now and then, though, a stock doubles or even multiplies its dividends. That's as rare as spotting a unicorn at the CPF building. How does it happen? Usually when a company scores big, like selling assets or enjoying a profit windfall. But here's the catch. These spikes are one-off party moments, not the kind of compounding you can count on year after year. True wealth comes from companies that keep growing those payouts steadily, through booms and busts. The secret? Learning to separate unicorns from cows. Find stocks that reward you again and again, not just when the stars align. Okay, first up on our list is DFI Retail, this year's headline grabber with a jaw-dropping 1,265% dividend increase. Yup, you heard right. Here's the scoop. DFI declared its first special dividend in 18 years after some major portfolio moves, selling stakes in Yonghui Superstores and Robinson's Retail for nearly $900 million, and unloading its Singapore food business for $93 million. Result? The balance sheet flipped from debt to net cash of $442 million. Underlying profit rocketed nearly 39% to $105 million in H1. Imagine a table showing DFI's regular and special dividends. Suddenly, the line shoots straight up. But let me break it to you. The regular dividend stayed flat. This spike's all thanks to the big asset cash out. Once that extra cash runs dry, we're back to regular programming. Iggy's take, DFI's windfall is like hitting the jackpot at Marina Bay Sands. Sweet while it lasts, but don't count on walking home a winner every time. Long-term dividend chasers should skip DFI unless they're banking on a one-off durian season. Treat this year's payout as a tasty treat, not your staple. Now let's switch to a real dividend engine. IFast is guiding a 35.6% jump in dividends this year. Not a fluke, a solid organic climb. Their full-year payout goes from 0.59 to 0.08 per share. The latest interim dividend alone jumped 33%. Behind the scenes, IFast's profits and assets are breaking records. Revenue up 24%, net profit up 35%, assets under administration at $27.2 billion, and more than 1 million accounts served. Their digital bank alone holds $1.5 billion in deposits. If you picture a growth chart, every line's pointing up, not just payouts, but profits, assets, and expansion. Iggy's take, IFast, is the real deal if you want compounding dividends. The business keeps growing, payouts keep rising. This is your slow cooker for steady income. For portfolios that want growth and reliability, IFast deserves a starring role. Now for a wild ride, PropNex nearly doubled its net profit, launching a record 5-cent interim dividend. How? Singapore's property market bounced, transaction volumes exploded, and PropNex's army of agents swelled to nearly 14,000. Revenue up 73%, net profit up 122%. You get the picture. Imagine a table with numbers that leap off the screen. But here's the lesson. Property is boom and bust. PropNex's payout matches the hot market, but when things cool down, dividends can shrink fast. Iggy's take. PropNex is a tactical play. If you time it right during property booms, you're in for fat payouts. But steady income seekers, beware. Cycles matter. Buy when the market roars, exit before the music stops. For full charts, checklists, and the playbook, grab this post on Substack. Links in the description. Singtel finally posted a 13.3% increase. A glimmer of recovery after years of flat growth, thanks to better associate results and tighter operations. But is it permanent? Iggy's take. Singtel's boost is like a flash sale. Good while it lasts, but don't make it your staple. Tactical investors might dip in short term. For compounding income, look elsewhere. DBS, UOB, and OCBC. Let's break down the heavyweights. DBS, store 75 dividend per quarter, is $300 annual, mixing base payout with capital returns. That's 39% growth year on year. DBS leads with visible, consistent returns. UOB, $1.10 half year, up 25%, including special dividends. OCBC, down 6.8% on interim payout, but planning $2.5 billion in special dividends and buybacks. Visualize a side-by-side table. DBS at the front with robust steady payouts, UOB offering tasty special bonuses, OCBC lagging but still in the game. Iggy's take, banks are Singapore's dividend backbone. DBS is the cash cow, UOB adds spice, OCBC has potential. For compounding income, these belong in every serious investor's portfolio. Industrial REITs like Sabana and Keppel DC quietly grow, delivering 26.9% and 12.8% increases. ComfortDelGro jumped 16.7% on pandemic recovery. ST Engineering promises to share a third of profit growth with investors from 2026. No fireworks, but solid, reliable income. Think slow braising a stew. Visuals here would show steady lines, not wild leaps. Iggy's take, mix these slow cookers into your portfolio for security. Over years, their dependability shines, compounding quietly. SGX lifted dividends 8.7%, now pledging quarterly payouts locked in till 2028. Oil Tech thrilled investors with a 66.7% bump, but as a small cap, it swings wildly. Think of SGX as the dependable MRT, always on schedule. Oil Tech's more like a thrill ride. Visuals would show SGX's smooth path versus Oil Tech's roller coaster spikes. Iggy's take, for calm, predictable income, SGX is a winner. Oil Tech is for those who like excitement, with the risks that come with it. Time to get real. Dividend investing isn't risk-free. Economic downturns shrink profits, cut payouts. Rising interest rates hit property stocks and REITs. Higher financing costs, weaker assets, trim dividends. Property cycles swing. PropNex flies high one year, drops the next. Telco and fintech competition means payout volatility. Geopolitical shocks or regulatory moves hit cross-border profits. High payout ratios mean less buffer if earnings fall. Some years, cuts are almost guaranteed. Big lesson? Diversify. What seems safe now might stumble later. So how do you build a portfolio that really pays you more? Buy for reliability. IFast Corporation and DBS Bank stand out. Strong profits, steady double-digit payout growth, and visible capital policies. For data center lovers, Keppel DC REIT gives predictable rises. Hold tactically. PropNex and Singtel reward short-term moves. Ride the cycle. Leave when the fun ends. Avoid for income. DFI Retail. One-off windfall only. Oil Tech is high risk for core dividend portfolios. Final tip, focus on companies that grow dividends year after year and ride out market swings. Compounding beats one-off payouts and grows your income and confidence over time. If you found this video helpful, smash that, like, and subscribe. I drop weekly deep dives tailored for Singapore investors, and our Substack community is growing fast. For full charts and bonus content, check the written version, linked down below. And if you want to boost your investing journey, consider joining as a member for exclusive guides and conversations. Which stock will pay you more next year? Let me know in the comments, and don't forget to watch my next video on building a regional dividend portfolio.